I'm feeling high.
Subscribe, like, comment, and share this video around the Forex community to help others achieve their dream.
What qualifies you as a good trader? Being a good trader requires a combination of skills, knowledge, mindset, and discipline. Here are some key qualifications that contribute to being a good trader. Knowledge and expertise. A good trader possesses a deep understanding of the financial markets they are trading in. This includes knowledge of market trends, fundamental and technical analysis, trading strategies, and the factors that influence asset prices. Risk management. Effective risk management is crucial for success in trading. A good trader knows how to manage their capital, set appropriate position sizes, and use tools like stop-loss orders to minimize potential losses. Discipline. Discipline is essential to follow a trading plan and stick to a strategy even when emotions are running high. Emotion-driven decisions often lead to poor trading outcomes. Adaptability. Markets are dynamic and subject to change. A good trader can adapt to different market conditions and adjust their strategies accordingly. Flexibility is key to remaining profitable over the long term. Patience. Successful trading requires patience. Not every trade will be a winner, and it's important to wait for high probability setups rather than constantly chasing after opportunities. Continuous learning. The financial markets are constantly evolving, and new information emerges regularly. Good traders are committed to ongoing education, staying updated on market developments, new strategies, and trading tools. Emotional control. Emotional control is crucial to making rational decisions. Fear and greed can cloud judgment, leading to impulsive actions. A good trader has the ability to keep emotions in check. Analytical skills. Strong analytical skills are essential for interpreting market data, identifying trends, and making informed trading decisions. This includes both fundamental analysis and technical analysis. Goal setting. Good traders set realistic goals and develop a trading plan to achieve them. Goals provide direction and help measure progress. Record keeping. Keeping a detailed record of trades, including entry and exit points, reasons for the trade, and outcomes, allows traders to analyze their performance and learn from mistakes. Backtesting and strategy development. A good trader tests their trading strategies using historical data to assess their effectiveness. This helps refine strategies and understand their potential risk and reward. Networking. Connecting with other traders, participating in trading communities, and learning from experienced individuals can provide valuable insights and perspectives. Remember that becoming a good trader takes time and practice. It's important to start with a solid foundation of knowledge and continuously work on improving your skills. Additionally, no trader is immune to losses, so managing risk and maintaining a long-term perspective are crucial aspects of successful trading. Follow me for further videos on achieving consistent profitability in Forex trading.